really pleased to have Rashmina graciously offer her time. She's obviously a CFA, but there's a lot more letters that come after that I can't even go through because we're going to be here all night. And so with that, I'll just pass it on to our speaker, and hopefully we get to learn something tonight.
Thank you. Yalamadad, everybody. It's an amazing turnout for people who sleep by 9 p.m. Wow. Before I start, let me give you a very brief introduction of myself. My name, as you see, Rashmina Lalani. And I've been associated with the field of investment and finance since 2008 when I completed my bachelor's in finance. Then I completed my master's in finance. Then I had more problems with finance, so I completed my CFA. And then when in 2017 I came to USA, after marrying this handsome guy from Jamaat Khana, I got a job with Merrill Lynch as financial advisor, and I had to go through more licenses, requirement, and everything. And in the process, I also completed certified divorce financial analyst. So yeah, it's been a quite educative journey for me. And I worked as investment analyst, research analyst with different brokerage houses, asset management companies. And recently I found my true passion after reading a book I'm going to gift you in the end for the person who participates the most, that I need to make finance and investment easy and relatable for everybody. Because I think that a lot of people are scared from this field. So I started my own podcast called as the Finvestors Podcast. And I'm also on social media as Mrs. Finvest, where I try to keep up with the market. I try to my best. I have a baby, so I'm dealing with this mompreneurship. But the whole idea behind this event and my podcast is to make things easier for you and for general public about investment and finance. Before we start, a disclaimer here. Any company or listed business, the names I've used here, they are not recommendations by any means. They are only there to give you examples. And I'm not giving you any magic pill tonight. I have no idea what you have in mind. This is not a survival plan, what you have here today. This is an action plan. You need to activate it today to survive for the next, I don't know how many market downturns are going to come, because they come every couple of years. So this is an action plan you need to survive in the future. I request all of you to take full participation, because if you don't, I'm going to pick out people from you guys. Do not shy away. You all came here at 9 p.m. and you're going to sit here until 10, I don't know when, to learn something, right? So do not shy away from answering the questions if you already know. Nobody is judging you here. I have a question. Who is the person who regularly works out? Anybody else? Okay. Great. So you know why do we have to warm up before the workout? Why? Why do we warm up before the workout? Anybody? You don't pull muscle. And you get ready, right? Your body's like, yeah, I'm ready to get in. Just like that, we're going to do a mental workout, mental warm-up. Before we really get into the presentation, we are going to do a mental warm-up regarding finance and investment questions. And whoever gives me the right answer gets a candy. Everybody loves candy. Okay, so my first question is, you can raise your hand, and where's the other mic? Who has the other mic? Can you please? You can raise your hand, and if nobody raises hand, then I'll do this. Whoever comes at my finger point. Okay, what is the difference between an asset and a liability? You can say it if you're loud enough. My candy is ready.
So the difference between assets and liability is that assets are things that you own, and the liabilities are the ones that assets is something that you own, like property or capital or whatever, and liability is something that you have to pay for. And usually the equation is assets minus liabilities equals equity.
Great, the candy is yours. Okay, name any 4 types of investments. Any 4 types. No, you have to name all 4 together.
All 4.
Yes, all 4 together. Okay, we have somebody there. Equity options are more like stocks. I need one more. You got 3. You got it. Okay, What types of retirement plans? Any three? Here.
IRA, 401k, Roth and 401k is same.
No, they're different.
Oh, they're different?
Yes.
So Roth, IRA, and 401k.
Here you go. Sorry. What is IRA? What is IRA?
Individual retirement account.
And
It's a retirement saving account.
what is the benefit?
You don't pay tax, you defer your tax,
Right.
but you pay when you withdraw.
All right. What is the difference between IRA and Roth IRA? Anybody? No, I'm not repeating people. New people.
Roth is something where you pay taxes upfront, and then when you withdraw, you don't have to pay taxes later. And IRA is something where you pay taxes in future. When
What are you guys doing on the chairs? Come here. Why are you on the chair? Okay. What is the magic pill in finance which helps your money grow? What is the name? Nobody's going to say it unless you raise your hand. What is the name of that magic pill? Compounding. Compounding is the magic pill. Here you go, Asif bhai. Okay. What is dollar cost averaging? Dollar cost averaging. Okay. All right, you can go ahead. Nikal jayegi boat.
Spreading your money over a period of time versus like lump sum all at once.
All right, you get a candy too. I think that was a pretty nice warm up, everybody, right? Or you want me to throw more questions? All right. So I think that I'll continue to do so. Don't worry. You have to participate in this whole thing with me constantly. So the topic we have here today is how to leverage a market downturn. So I guess it's very important to understand that what really is a market downturn, right? Can anybody help me here? What is a market downturn? Anybody? I'm sure that you saw the topic. That's why you came running here, right? Again, at the sleeping time.
When borrowing the money become expensive,
Okay.
and it have a domino effect on your every activity, whether you want to borrow money or you want to invest money, everything costs, and that bring the inflation and cost down.
Something related to economic activity slowdowning, right? Anybody else has a different opinion?
is it where GDP goes negative and then you pay more, like inflation?
She just reminded me of a question I forgot. I need to ask this question. I have to ask this question. What is recession? The hottest debate. What is recession? What is recession? I'm going to point out now if nobody is picking up.
Negative GDP.
No. Yeah.
Two successive quarters of negative GDP.
2 or 3? 2 or 3? 2. Okay, then what is emotional recession? Anybody knows what is emotional recession? Is recession here? Okay.
Does it have to do with expectations?
Exactly. Recession, no recession. Are you guys not feeling the burden of inflation? Paying extra for grocery, paying extra for travel? That's emotional recession. It doesn't matter if recession has come or not. If you feel it, if your income statement feels it, then you are in emotional recession. Market downturn, let's see what market downturn is. If you Google it, because Dr. Google is the best, market downturn is described as constant decline in the price of stock market. But for the sake of a discussion here, I've included all the assets. For the sake of discussion, let's just say that a market downturn is defined as the constant decline in the prices of all the assets. But if we are going to talk about the decline, do we not need to talk about the incline first? I mean, why was growth happening at the first place? So I think the first question we all need to understand before we go and find the opportunities in market downturn is to understand, because those opportunities mean what? That you want market to go up, right? Or you want something else. You want the profits out of market decline. So we need to understand that why it went up at the first place. Does anybody have any idea before I click my next button that why market goes up? What really affects the market? You're right. Demand and supply. Anything else? You'll get a candy. when I come there. Anything else? Do you have anything else in mind? Are you a finance major or what?
Corporate earnings? Yeah, I'm an econ major.
That's why. So a market is based on many things, but the first and the foremost is how the government structures the economic policies. Recently, Biden just passed the Inflation Reduction Act, and this act is all about efficient energy. You know what happened because of that act alone? First Solar. Who knows about what is First Solar company? What does it do? What does it do? Exactly. This company, listed on a stock exchange, went up 118%. I'm not kidding, you go back and see. 118% in last 12 months when NASDAQ and S&P 500 went down 23%. Markets are going down 23%, but a stock is going up 118%. Why? Because of the economic policies designed around that particular industry. So economic and political policies are the first hit on the market for any direction. It can go up, it can come down. What is happening right now? What is Fed doing? Federal Reserve? Increasing interest rates. And what's happening because of that?
Inflation increases the cost of capital.
What happens is that all of these businesses need money, right? If you make money expensive, then their cost is going to go up, then the market is going to come down. So the first effect on market for any direction, be it up and down, is the economic policies. Next is your rational expectations. Nobody invests in the market because they just love it. Everybody invests in the market for the profits, right? You want companies to do better, but how do they do better? The point she made, I'm going to give you candy, I'm not going to forget it. Supply and demand. When there is a lot of money in the market, which happened in 2020, I received a couple of checks from California State. I'm sure a lot of people received it. So what was happening in 2020, that government was pumping money in the market because they wanted people to spend, because suddenly everything was like on ceasefire. So when you have a lot of money in the market, you demand more. When you demand more, companies produce more. When companies produce more, their revenues go up. And when the revenues goes up, what happens? Profit goes up. Stock is the latest story. Profits goes up. And that's when the stock price moves. You can have unlimited revenue, but if your profit is not going up because your cost is so high, there's no point. Nobody is going to buy your stock. So the profits have to move their place for the stock price to go up. So the expectation of the profits going up, companies doing better, demand going up, is why the stock market moves the needle, or for that matter any asset. Why do real estate prices go up? What really happens? Especially in this Bay Area, what happens? Demand. Demand is a lot here. A lot of immigrants come here, a lot of tech people come here, they need good housing, and that's where the demand picks up, and that's why wherever the demand is going to pick up, the rational expectation, you'll see increase in the prices of asset, and you'll see stocks moving upside. As much as I want stock market or any asset to be perfectly synced to our data and logic, that's not what it happens. It doesn't happen that way. How many times it has happened with you guys that you bought something too quickly or you sold some stock too quickly and later regretted it? Did it happen to anybody? Does it happen? To all of us, right? Because it's nothing about rational when it comes to common investors. We all act on our feelings, our emotions, and our biases. I'm not going to get a lot into emotions because they basically derive from biases, but I am going to get into biases. So next time when you're making your investment decisions, you'll know, oh yes, I heard about it. That's what I'm doing. The first bias I'm going to talk about is herd mentality. Anyone has any idea about herd mentality? I'm getting the same people. I need new people. Can you give it a thought? What is herd mentality?
You follow the crowd, you follow what people.
Exactly. I'll be honest and I'll accept. I bought Bitcoin because everybody was buying Bitcoin. And I even bought Dogecoin because everybody else was buying it. Herd mentality. It was nothing else. Even like after so many degrees, I just got into the motion and I'm like, Everybody's buying it, everybody's talking about it. Wherever I would go in 2020 after the lockdown was over, Bitcoin, and I'm like, oh wow, I think I'm missing on something. It's okay, I'm a new mom and I'm too busy, but I need to get on the board. And I did. And I can't tell you what's happening to my portfolio. Thankfully, I invested a very little amount. But we all do that. Whenever we are investing, the big names we see on news and media or whatever comes on our like notifications, we just want to do that because everybody else is doing that. So this herd mentality is one of the biggest reasons to drive the asset prices in the market. The other is confirmation bias. Any idea what is confirmation bias? Okay, I'm going to give example of my husband here. So when in 2018, Tesla was like hot stock or something. And he loves Tesla for some reason. He was after me like anything that I need to buy Tesla stock, but I never liked it. I don't like companies where management can tweet something and the stock price would move too much next day. If I can't trust management, I cannot buy it. I'm not saying whoever bought it was wrong. You have your reasons. But I never liked the stock. I liked the product. So whenever we would go on roads, by the way, he has a Tesla since then. So whenever we would go on the roads, he would show me, you see how many cars are increasing? There were all other cars there, but he could only see Tesla. Why? Because there is a confirmation bias. He loved the product. And by the way, he made me buy it. And again, don't ask me what's happening to my Tesla stock. So point is,
He was sold by Elon Musk.
looks like it. Looks like he got a personal tweet about it. But the point here is that in investment, we make many decisions of buying products, real estate, cryptocurrency, investing in a business which we want to. Our mind is already confirmed on it and we just need something to confirm it. So confirmation bias is one of the things which really greatly affects our stock market, real estate, and every other asset. My last is loss aversion. Are there any people who lost significant amounts in the market? Right? Everybody did, especially in this cycle. Do you feel that the pain of losing this is way higher than ever you gained anything? Right? How many times this happens to us that we can keep crying and get sad on the same matter, but not become happy on the same issue? It happens to all of us, right? Because the loss aversion is a psychological concept that if you lost $100 in the market, the pain is far greater than the pleasure you will get by gaining the $100. So loss aversion is one of the reasons a lot of people do not sell their bad investments, and that keeps market prices inflated for the wrong reasons. And that is one of the reasons which affects the direction of how the market moves. So these biases are very important to know, not because you're leveraging anything in the market right now, but for your future investments. So of course there is economic policy, there is your expectations of profit, earnings, dividends, then there is these biases and emotions, and then there are day traders. These people can do anything. They can just like put AMC, bring AMC, and what was that stock? Game. That was all day trading. I mean, I couldn't find anything really fundamentally strong, but it was all day trading. So day traders have a lot of power. Day traders have a lot of power in moving the direction of stocks, real estate, flipping. These people make a lot of money. These people set the direction of real estate. So these are the fundamental things which drive the stock prices, real estate prices, other asset prices, business prices. But then if these are the things which drive up, what are the things which drive down? Can anybody suggest anything? What drives down? What brings us to the point of discussing market downturn? Anyone? Econ major, I don't want. Yes?
Same things.
Can you give me an example?
For example, if government started increasing the interest rates, then this is happening. It will be the opposite.
Exactly. The first and the foremost thing which happens to the market, which contributes to market downturn, is economic and political events. If Mr. Powell raises another bout of interest tomorrow, the market is going to further come down. That's an economic change which is happening in the economy. If so, Ukraine and Russia, something happened there, The Europe was in short of gas, their product prices went up, their economy was down. So any political event which is not in the favor of businesses per se, a new tax code. So I think when Trump came in, he reduced the taxes for the corporates, but increased for the individuals. But the corporates were happy, market went up, and he kept on saying, I remember on the news, I was newly here, and he was like, I did this to stock market. I did that to stock market. Yeah, he did, because he reduced the tax rates. When he reduces the tax rates, earning goes up. So any political or economic event, policy, tax law, when it changes in the opposite direction, which does not favors the business, the market will tank. The other reason market will tank is, somebody knows what happened to oil? What happened? What happened right now? Why is market in a turmoil? So oil is something which is not only on our pans. We don't just cook with it. We use it in every single industry. Every single industry, either oil or its products, petroleum jelly or a lot of stuff. So oil is used in everything. You jack up the prices of oil, OPEC or non-OPEC countries have something to like gain more, and everything will change. And that's what happened. We had a lot of money floating around in US, and a lot of things were happening, and then oil prices went up. Everything became expensive. When everything becomes expensive, what happens? Supply is tight. Companies cannot produce at the lower cost. So either companies are going to absorb the cost or pass on to you. So first, when all this turmoil began in early 2021, companies were trying to absorb so the people can keep using the product. But then there came a point they were like, okay, we are done. You guys need to take the load of it now. And then they pass on to you. And that's when inflation happens, right? Now things are getting expensive. So anything, any input, if that becomes unfavorable, if that becomes expensive, stock market goes down, other asset goes down with that. The last thing is fear of unknown. What is fear of unknown? What do you think it is? And why does it affect the market?
COVID.
We didn't know COVID is going to happen. We didn't know we would have to sit at home for so many months. So when that happens, who remembers to invest, yeah? Who remembers? Who remembers to open the account and do something about it? All I remember was taking care of the baby, and all other people remember was to checking the Netflix and eat something. Who remembers? So when anything like that happens, the activity in the market decreases. And fear of unknown is something that human psychology cannot just accept. If we don't know something, we cannot just stay with it. We don't know if recession is going to come or not. Okay, we don't know if we should invest in the market or not. Because it has been a long debate. I'm just tired of this debate because it does not matter if recession is coming or not. Everybody's feeling the burn. That means your recession is there. I don't know about the government, but your recession is there. And if you're not feeling the burn, great. You should come here and talk to us. So the point is this, that the fear of unknown also tanks the market more. When people don't know what's going to happen, they tank the market more. Why? Because they sell their stocks. They sell their real estate quickly, or they do not sell their real estate quickly when they need to, or they sell their stocks quickly, or they sell it when they are sitting at a loss because they fear, what if my $100 loss would become $200? So these are the things which basically tank the market and cause the market downturn. I've just for your reference presented a chart here that what really happened to SPY. I usually like to use SPY or S&P 500 companies because that is the largest index here other than Russell 1000 and etc. But these are like the most important indexes to follow. So what happened to S&P 500 index is that it was doing great in 2020 because Federal Reserve pumped a lot of money. They sent the checks, people were having fun, great. Good, and then 2021 happened, oil prices went up, and since then market is like on a declining path, and that's what we are talking about today, the market downturn. Okay, so how to find opportunities in the market downturn? I'm again telling you, I don't have a magic pill. It's your action plan which you need to incorporate today to make sure that the next downturn, you're not hit that hard. This is not a survival plan. A survival plan is get new skills, save more, pay your credit cards. And we are going to talk about it very briefly towards the end. So, does anybody remember what happened in 2007? No econ major, please. Somebody else. I'm going to pick otherwise.
Real estate market. Real estate. Lehman Brothers.
And why? Why did that happen?
No, the credit, mortgage-backed securities. Yes, exactly.
MBS, mortgage-backed securities. When this all happened, I was doing my master's, my MBA in 2010. I prepared a report on quantitative easing by Federal Reserve, never knowing that today I will be standing here and talking about it. But anyway, 2007 to 2013 was a really bad period. And people who were invested in the market that time, they would agree with me that it was a period of very unknown, emotional, not really knowing that when this will be over. So this graph, if you look very closely what happens here, that from 2007, early 2007, market was doing hallelujah. Then it came down, and on October 2007, everything crashed. And since October 2007, it took markets 66 months to come back to the position it was on August 2007. 66 months. You know how many years is that? More than 5. More than 5 years. We have not in this turmoil or whatever you call it, market downturn, more than 1.5 years. And we are already shaky. Everybody's shaky. I see so many influencer videos of I don't know what. I'll talk about it later, but we are all so shaky that what to do. Should we buy real estate? Should we buy the house? Should we buy this stock? We should buy just SPY, or we should buy just bonds. We are all very shaky. But this was 5.5 years. Can you imagine the time period? What if you were to retire on December 2007? All the retirement assets are maybe half the price, or they're all gone. So this time period was the really bad time period, the recent really bad time period. That's why I've used it as my example here. So definitely there is no doubt that this was one of the hardest time periods. And if you go into the history and Google that what really happened, most of the world blames United States for it, because they issued the mortgage-backed securities, they did all this leveraging, they did not save the Lehman Brothers, the insurance was corrupt. They blame all US. But that does not matter to a common man, that who did it. What matters is when you open your portfolio, it shows you negative, red. All your income for the last 5 years is gone. And that's threatening. But I have to present a scenario. This scenario is completely based on the real data. I have not created here anything. So you have seen how the market behaved. It took SPY 66 months to come back to the level it was in August 2007. Now imagine that regardless of whatever was happening, right? Regardless of whatever was happening, you were the most stubborn of all investors and you thought no matter what, I'm just going to invest $100 every month. It does not matter what's happening. I'm just going to continue doing it because I saw an influencer saying on social media that be disciplined. Just keep investing in the market. So that person just kept investing in the market for the next 75 months. So how many payments will that be? 7,500? So your capital is 7,500. This graph shows that if you had remained invested in the markets $100 every month, your investment would go up around 12,000. And there is no magic happening here. I'll tell you what's happening here. But if you had remained invested, your $7,500 over this period, and mind you that you're not investing $7,500 together. You're investing $100 bit by bit every month. And you're standing where? You all can read graphs, right? Somewhere around 12,000. That comes, if you do the calculation, it comes around 50% gain, something like that. What is happening? Anybody has idea? SPY took 66 months to come back to its original position, but in just 75 months, you're standing there if you had remained invested. What is happening? In the beginning, you answered a couple of questions. That was the answer to this graph. Compounding. But more than compounding, the other phenomena is happening. Dollar cost averaging. Dollar cost averaging is happening here. You're buying at the lower levels, and when markets started going up, your profits have started going up. So this is proven here, and I've not created this. This shows us that we need to constantly invest, no matter what. Don't let your fear come over you. Because why? What is that one thing we can never do in the market? What is that one thing? Time the market. There is no envelope dropping from the sky which tell you that tomorrow do this. There's no envelope. Nobody comes to you. Unless you are doing insider trading, you would never know that when is the best time. You will never know this. And don't do insider trading, please. I just watched this a series on Netflix, Madoff, and it's crazy that how SEC just let go of things, and now they're like, I was in the Merrill Lynch and I know that, oh my God, if you are my client and you said, oh, I'm very tired, I had to type, oh, you are very tired. That's what the client said. Because SEC has put so many rules and regulations now that we have to type everything we talk to our clients about. But the point is this, that we know that we have to invest. So what is our first step to find the leverage in the market? What is our first step?
Dollar cost average, constantly invest.
Invest. People invest. But the point is this. People ask me on WhatsApp, tips to de. Do I look like a tipper to you? Like, what do you think? I'm a day trader or something? That I'm going to tell you something and next day you will be rich? No, if I knew it, would I be living here? I might be living in LA or something else. I'm not a tipper. I'm doing the same thing you all are doing. Dollar cost averaging, compounding, constantly investing, finding good companies to invest in. So we all need to have a framework. Market downturn, no market downturn. You need to have a framework that how are you going to invest in the market. And what is the best framework? When your ship is sinking or when there are floods, what do you do? What do you do? Get a good boat, right? Huh? Get a good boat, not the one with the holes. Do you want to take a chance when your life is at risk? So market downturn is where your portfolios are at risk, right? Why do you want to take a chance? So invest in blue chip stocks which have been there over a long period of time and again which have proven that okay, whatever happens, we might have a little bit setbacks, but we are not going to sink. Apple, Visa, FedEx, there are many other examples of blue chip companies which are not only cash rich. Why am I saying cash rich? Why do a company has to be cash rich? Or a business, let's say if you think about investing in a business, would you invest in a business at this point in time which has not proven itself in the past? No, right? Because this is not the time to take risk. This is kind of a survival plan. You cannot put your assets at risk which are already down in the market. So when I say invest, I don't say go and invest in a new risky, some biotech startup. I'm not asking you to do that. I'm asking you to find good companies with this kind of framework. I presented the framework with you, and if they'll send you the I think they'll email you the presentation. So the presentation notes are there where you find more details on what is the framework. And I've also, not that I'm promoting myself, but I've done this for you guys. And I've also broadcasted an episode on how to evaluate companies, a case of Netflix. If you like it, there are 2 parts to it. They're pretty short, 15, 16 minutes. You can go and check the framework what is the framework you look for when you want to invest in a company? How do you know that, okay, this is a good company I want to invest in? It's not very complicated. I've tried to simplify it as much as possible. So first is definitely have a mindset of investing in small companies, listed companies, real estate, whatever you invest in. Make sure that you understand that, okay, it's a good company, it has survived for many years. The next is, of course, when market downturn happens, jobs kickoffs, right? Google announced it yesterday, I think. So this morning, so when that kind of thing happens, your incomes are not going anywhere up, they'll probably go down. So you definitely want to invest in income producing assets. For that, you have Dividend Aristocrats Index. You have companies like Kinder Morgan, Target. You have bonds like I-Series bond. You have government bonds. You have company bonds. So even Tesla has a bond. If you go and look for company bonds, you can find it and they pay really good interest because they want your money. So they have bonds. So you can invest in assets which can give you extra income on the side. Or you can invest in a business passively and reap the benefits. So you have to keep in mind, okay, it's market downturn, I don't want to take risk. Okay, I can invest in blue chip, then I have more money, I can invest in maybe income producing assets, but invest early. A lot of you guys are very young. The reason is, I think you already described it, compounding, dollar cost averaging. But a bigger reason is, you can make mistakes early, right? Go sink the whole boat. You have the whole life, right? Go sink the whole boat, does not matter. You have a long time. But if you sink your boat around 40, 50, Allah khair kare. Not good scenario. So invest early, because obviously when you're early, you will take risks. By default, you're young, you will take risks. Sometimes it will give you money. Bitcoin, many people buy at 8,000, sold at 60, but not everybody was able to do that. So do it early so you're able to adjust if anything happens to your portfolio. And God forbid, don't invest in anything you don't understand. Mujhe pata hi nahi hai what is Dogecoin. I regret that decision. I have no idea what is that. I only saw everybody is doing it and I did it. Don't do it. You don't understand a business? Don't do it. You don't understand a company? Don't do it. The people who have been associated with me for past couple of years, they know that I always say it. If I don't understand a business, be it Netflix, if I don't understand it, I'm not going to put my money in it. And Bitcoin taught me a very good lesson. It just reminded me. So do not invest in companies just because of the herd mentality that, oh my God, my neighbor was telling me this stock gives a very good return. I need to invest in it. Don't do that. And mitigate risk. I saw that a lot of people, you work in tech companies and good companies. So I'm pretty sure that your companies offer you 401k options and everything. One of the biggest problems with 401k I have encountered is that you are so overconfident in your own company that you put all your savings in your own company as a stock. Can you imagine what happened to the people invested in FTX? I mean, I was reading and I was like, oh my God, what is happening to, like, if ever my credit card bill is not paid, I'm like, my face is like all, what happened? And they lost all of their savings. Why? Because they will remain invested in their own company's stock. This is one of the biggest bias in a stock market of overconfidence. And that's where it is very important to diversify your risk. Have confidence in your company, you're working for them, but don't be a fool. That's not your business. You're working for them. So invest, but diversify. Do not forget to diversify. Especially those young people who are investing in 401k, make sure you are not overconfident about your own company. अलग अलग बास्केट में डालो ना यार, टूट जाए तो इतना गम ना हो. You know, loss aversion, it's really bad. It really hurts. So invest, but with all of these things in mind. Let's see what's next. So I just talked about diversification, right? अभी क्या करें if you don't have money? पैसा ही नहीं है तो how will you invest? Then you need to go for the plan B. This is become part of the companies or become part of the businesses which can survive no matter what is happening in the market. Everybody have seen the movie, na, right? Roti Kapra Makan. Abhi bijli, add the bijli. Electricity, right? So these are the basic things. No matter what happens, you're not going to stop eating. Maybe you'll reduce the amount, but you're not going to stop eating. You're not going to leave your houses and run away. You need all these basic items to live. And market is not so bad right now that you will have to leave all these things and starve. So these are the sectors, businesses, areas where you can not only invest, but also be a part of them. Maybe be a side part of them. If you can get a job here, get a job here. If you cannot get a job here, invest in them. And there are many small companies which work around these sectors. So you can utilize. So what am I adding here? Let's talk about essential consumer goods. A lot of people consume so many beverage and food during COVID after that. And this is like a proven, I think, research that the more you are stressed, the more you eat. Yeah? So take the benefit of it. A lot of people are very stressed. They eat a lot. So you need to invest in these companies no matter what is happening. So like food and beverage, Coke, Pepsi, McDonald's. Constellation Brands. These all are the companies which have been surviving this, whatever is happening. They survived 2007, they survived 2008, they survived 2000 when something happened. They've been surviving a lot. So these are the companies you want to get in. Okay, I'm not recommending anything. These are only for examples here, okay? Don't say you recommended it, I bought it and this is happening. I'm not recommending anything. Then the household items. Home Depot is still crowded. I see people there. This is still crowded. Target is still crowded. Mom therapy, lady therapy. I don't know how many people make these funny videos about Target therapy. But Target is in. Such companies are in. So you need to focus on that those kind of companies. Healthcare. No matter what happens, will you stop going to doctors? You'll pile up the medical bills here, but you'll not stop going to doctors. Why? Because you need it. It's a basic requirement. So this is one of the industries you can invest in or work for or have a side hustle for. Utilities. Bijli is very important. Meri to gaadi bhi bijli pe chalti hai. So I need electricity. So utilities is one of the things that you need to invest in. Oil is always needed, no matter up and down. Even when the oil prices are down, these oil companies pay little dividend, but they do. Like Kinder Morgan, it's always paying dividends. And I think it's one of the highest dividend paying companies in the dividend aristocrat index. Last is real estate. So real estate, I'm not asking you to go and buy the real estate. This real estate is specifically REITs or the rental units. Because I was reading on Nextdoor, किसी ने वहाँ जाके type किया था कि my lease company is increasing 15% rent from next month. What can I do? And I'm like, wow, 15%. That's a lot. What if I was invested in one of these rental companies? At least 5% would flow to me. So you need to find industries, companies, businesses, assets which can survive this time period. And if you Google it, again, Dr. Google will tell you these are called defensive industries. Just in case you want to know more about it and want to learn more about it. So the first step was keep investing. The second step was be a part of the resilient businesses. Favorite, America's favorite topic. I had to touch base with it. We all love it. Sorry. Yeah. So why taxes? What can you do with taxes? Anybody has any idea before I go further into it? How can you save taxes in market downturn? I wish you guys were following me on Instagram. You would have known. I just posted a video and this morning I posted a podcast episode about it.
The best time to sell the stock, take the loss, and also
Use capital losses. Use capital losses against capital gains you might have taken like early 2022, or maybe you are accumulating. You know that you can carry forward losses, right? So use those losses. Was somebody else saying something else? Somebody raised their hand. Were you saying something else? Were you saying something else?
I think find the loopholes, that would be a good idea too.
What kind of loopholes?
Sometimes there's like a tax on it, the bigger companies, they highlight a lot of accountants and find like little things here and there. That's how they, pay lower taxes.
Right, that's a little complicated. We'll talk about it. The easiest way. I swear I did just a 6 minutes podcast.
Invest more in 401k.
Invest. But that investment decision is going to be like forever, right? Market downturn, market upside, you can always invest in 401k, IRA, and always get the benefit of the tax. Are you adding something? Roth IRA, dudes. Roth IRA. It's like one of the, so from a lot of years, I think past 7-8 years, the debate is on whenever they design this whole retirement plan and increase the limit, that let's stop the backdoor Roth conversion. So we all know that if you want to invest in Roth IRA, you have to have income limits and a filing status problem. If you earn more than that or your filing status is different, you cannot contribute to Roth IRA. But you can contribute to IRA and then move it through the back door to Roth IRA. Why am I saying it's good to do now? Why? Why is the best time to?
market is down.
Market is down.
Take the advantage.
Move the assets. Just pay the lower taxes today. Move the assets to Roth IRA and maze karo. Let your money grow free. Because in Roth IRA, your money grows free. You might have to talk to your tax consultant. You might have to see, कि भाई जब when I'll sell my securities or transfer my securities and the tax bill comes, do I have the cash to pay it? You have to consider all these things. But this is the best time. And in case you don't have IRA or 401k right now, then put money in. Just open an IRA, put money there and move. Because market prices are so down. Pay taxes on lower levels of money. Pay taxes on lower level of income. Government ने छोड़ा हुआ इतना अच्छा loophole, but then you say government takes a lot of money, हमसे 40-50% ले लेती है. They are giving you tax loopholes, right? They are giving you tax loopholes. So use them. Use your capital losses. Use the Roth conversion. Take the benefit of the loophole they have left. So I think I was reading it somewhere that in 2025, even the tax rate would be revised and they might go up for individual people. I don't know, will they or they will not? I have no idea. In the future, will you earn more or less? I don't know. I just know today, time value of money. Today is more important, right? So time value of money, use that. Use today's taxes, the lower rate, the capital losses, or the lower portfolio value. Use that and move into Roth. Talk to your tax consultant, see if that strategy is good for you. But that's one way you can use market downturn to your benefit. If you have 401k, that can be converted into Roth 401k. If you have IRA, that can be converted into Roth IRA. I will give a link of IRS website. It's a very easy, simple chart where they show that, okay, if you have these accounts can be converted into Roth or not converted into Roth. I'll give it to Arsalan, maybe he can give it to you guys as well. So again, contribute to retirement accounts, take the benefit of lower tax rates, contribute or convert to Roth IRA, use capital losses against capital gains. And this last is very important. I don't know what is the problem of people with financial advisors. I remember when I was in Merrill Lynch and I would tell somebody I'm a financial advisor, oh good. Am I going to take your money away? Why are you going away? The problem with us is that we think that we can manage our money, but that's not the case. You're too busy earning your lifeline. You're too busy making money. You're too busy finding a new house, new job, new hustle, watching Netflix, watching Instagram, TikTok. You're too busy. Don't think you can do it. Are you a doctor for yourself? You're not. Are you a plumber for yourself? You're not. You have a specialized person for everything. Why not this? You're ready to pay fees to everybody else, but they charge so much money. But they make you so much money. They save you from troubles. But how do you find a good financial planner? I will give a very true opinion on that. When I was in Merrill Lynch, a lot of people, so when I went there, I was already a CFA, I was already an MBA, I've already worked in the investment industry for a very long time. But then I saw these new grads who barely knew anything. They somehow passed the securities license and they were going and telling people, we are doing a holistic plan for you, because they were teaching the script to us. And I'm like, what is happening? These kids don't know anything about money. I'm not saying those kids are bad. Those kids need to work with a trained, experienced financial advisor. So these are the characteristics you need to look in a financial advisor, because trust me, you are too busy. You don't have time. You've come here today, but you'll forget everything about it when you wake up tomorrow and you have plans, because our lives are too busy. These people can help you stay on track. But how do you find somebody good? Experience, for sure. They're not giving you any guarantees that, oh, your portfolio is going to do this, I'm going to do that. No, there's no guarantee in the market. Nobody can give guarantees in the market. There is no such thing as that. So a person who is experienced in the market, a person who is charging a nominal fee, usually in the investment industry, it's said that below 1% of your assets, who understands that, okay, there has to be savings, there has to be a whole plan, and a person who can actually say what you need, not what you want. You might want the financial advisor to say that go spend your savings on travel, you deserve it, you've been working so hard for the whole year. You don't want that financial advisor. You want the financial advisor? No, you cannot travel. Stay at your home, watch Netflix, go to movies. Don't go anywhere. You need to save, because that's your goal. You told me at the beginning of this whole arrangement we have. So find an advisor like that. And trust me, you'll see the benefits. Just like this whole, so a lot of people work out here. I'm currently trying to lose weight again. I know, a lot of people know again that when you want to achieve those weight loss goals, it doesn't happen overnight. A lot of work goes into it. A lot of dedication, constant dedication goes into it. And if you have decided that you're going to invest your time, you do it. Finance and investment is similar to that. There is no magic pill here. Even the compounding magic pill takes time. So you have to understand that these people will help you. If there is anybody in your area, in your neighborhood, or your friends have an advisor they trust and they like, find one and work with them. This is really important. And it's more important in market downturn. You might think, why would I pay the fee in market downturn? But this is more important because, as one of my family members says, you need to prepare for bad days in good days. He's here, sitting here. And this is very true. डूबती कश्ती में कैसे कुछ करोगे यार? So find a good financial advisor today and do not shy away. These people are not going to take your money away. I don't know why people have this thing. And I'm so tired of women telling me, my husband does all of it. My dad does. What do you mean? You're making money. You are educated. Take charge. Find a financial advisor. So if I have to compile everything, invest, be part of the defensive industries, save your taxes, use this down market for your advantage, and please find somebody good. But I'm going to touch base very quickly and briefly. All of this action plan is not going to work if your financial health is not good. You cannot work out if your knees are broken, your eyes are not working, and something is going wrong with you. You cannot do that. So it's important that you have good financial health. And how do you have a good financial health? Very quickly, we'll go over it. So instead of saying this, that save a little portion, I'm going to tell your mind to spend a bigger portion. Take the bigger portion out of your salary, your profit, spend it, and just let the smaller portion rest in the investment account. Just let it do its thing. So instead of thinking that I have to save something, think about, wow, I have to spend something. Oh, so good. I'll get to spend the larger portion. Your mind is very smart. It's going to play tricks on you. But remember, you have to tell it that you're not saving more. You're spending more. So then you will end up saving regularly. So definitely save regularly. Set credit card payment schedule. Please. These are very minor things, and because I've been brought up in Pakistan, we don't use credit card. I don't remember I ever had credit card. All thing was cash and debit card. So when I came here, I realized, oh my God, if you want a car, credit card. If you want a house, credit card. Unless you have under the table arrangement and have a lot of cash on hand, sorry, it's all credit card score. So have a set schedule. Do it automatic if you want, but if you don't want automatic, and if you want to see what's going and what's coming, do it every 15 days, every week, but pay your credit card. Have a set schedule. Like if any of you are following me on Instagram, you'll see that by the way, my handle is Mrs. Finvest if you want to find me. Instagram, TikTok, LinkedIn, you can find me by my name. I regularly post that, okay, it's 15th. I just cleared my credit card payments because that's a reminder I want to give you. So have a set, no matter how wealthy you are, set it. Wealth can go anytime. I hope that it doesn't, but it can go. Emergency funds, please. Emergency funds. You need to have it. What if your car breaks down, you have a big medical bill, something is happening? What will you do if you don't have emergency fund?
Credit card.
Then again, you'll pile up the credit card debt. Let me tell you this. What is the APR on credit card? What is the APR? Can you earn that level of interest anywhere right now? Unless किसी के पास जादू है तो please share it with us. We are all one jamaat, right? Please, if you have a jadoo, the magic pill, give it to us, please. But if you don't have, then you need to have emergency funds. Because what they charge you, the 21-22%, there is no way you can make it anywhere in the market, even when the market is going up. Again, if you had invested in Bitcoin and Doge, I don't know, you might have made it. I don't know, you might have made it. But other than that, you're not going to make it. So again, not branding myself, but this is something I did for you guys. I also posted the importance in how you can create emergency fund. It's on Apple Podcast, Spotify, it's everywhere. It's, I think 7-8 minutes episode, short and quick, but you need to have it. Start. This emergency fund is actually what comes before everything we just talked about. Because no matter what you do, no matter you're sitting on like $1 million IRA or $1 million investment account or brokerage account, if you don't have that right now, something happens, what will you do? You liquidate that. When? In a market downturn. What would that do? Take away all your gains you have made so far. Take away the probability of you investing in dollar cost averaging and compounding. So this is actually the step you need to do before everything else you do. So keep that in mind. That emergency funds is really important. I would also like you to have piggy bank something for your medical bills. If you can open HSA, FSA, do that. Okay, don't let the free money go. A lot of people, young people especially, working in good companies. Your companies probably provide you with a matching option with your retirements. That's free money. अभी किसी को $10 दूंगी तो कोई छोड़ेगा? I don't think so. मुझे दे दो मैं ले लूंगी. Nobody leaves free money, right? Don't let that go. Ask your HR, figure it out. If you're getting something out of your 401k, any match plan, do that. Do not miss on free money. If you think that you want to contribute more towards IRA, less towards 401k, at least contribute up to the matching limit. Do not let your free money go. And I think that's a wrap. If anybody has a question for me, I am here. Anybody has a question? थोड़ी उर्दू होनी चाहिए, I'm Pakistani. Do you need mic? So everybody can hear you?
Sounds good. I had a question around, how would you guide us in terms of like how much cash we should have in hand, especially in a downturn environment?
So that question is very related to the emergency funds I talked about. That is usually what you have. Finance and investment has some base theories, and it tells you anywhere from 3 months to 6 months. But I would honestly say, since I have a baby, I would keep 6 months. You might be two single people or one single, you can keep 3 months, depending on what gives you comfort. And I also told this in my podcast, do not let it sit. Cash is no good. Put it in high yield saving accounts. There are many online banks which are credited, which can provide you guarantees. They are good banks. Invest your money, emergency funds, in high yield savings account. I think current rate is anywhere around 3 to 4%. And if the interest rate goes further up, they'll go further up. So do not let your emergency fund sit. You know why? Because inflation is going up. So your emergency fund is going to worth less 6 months down the lane, 1 year down the lane, if you're not going to put it in any of the high yield savings account. And you can pull out your money anytime. There is no contingency in high yield savings account usually. But if you put your money in CDs, like 3-month CDs, 6-month CDs, usually their rate is pretty low. And then you have to lock in for 3 months, 6 months or further.
So on the profit of CDs, you pay taxes, state and federal both.
Right.
Why not T-bills, where you have state savings, right? You don't pay state tax.
So the safer the investment, the lower the rate of return. Always remember this. The safer the investment, the lower the rate of return. Because T-bills are very safe, given by governments, short-term bills. That's why the rate is low, but then you don't have to pay taxes. You can talk to your tax advisor about it. You can evaluate, again, with a financial planner, that what kind of risk can you take. Can you take the risk of investing in high yield savings account, which is FDIC insured. So I think you get a guarantee of $250,000 per person. So it depends on how much risk can you take. But again, in market, the safer the investment, the lower the return. Anyone else has a question?
Thank you for the presentation.
You're welcome.
My question is about diversification. So you give us some really good examples on the slide, and I'm curious if, in your opinion, investing in like a mutual fund or SPY is sufficient diversification. And related to that, I've heard a lot about having international exposure as well. And so is it sufficient for a lot of the large companies in SPY, for example, have international presence in other countries? So is it sufficient to just buy a fund like SPY if you're worried about diversification?
Warren, I don't exactly remember the year when they created SPY, but back then it used to be really hyped. Oh wow, they created a bucket. But now, because of integration, and I hope you understand what I mean by integration, that everything is connected to one another, and globalization, now SPY is more of a stock than a complete diversification itself. Back in the days when things were not so complicated, companies were not so interconnected, like I think Nvidia is the company which is badly affected by what happens in China, because some of their profits, I don't know, I did some work, I just don't remember what exactly, but I know that a lot of their profits is based on what happens in China. Then Apple has its units in other countries. So now a lot of companies are very interconnected, and there is a lot of component of globalization. So SPY has merely become, I'm not saying that there are no benefits, there are definitely benefits. In fact, if you go to a financial advisor, and even if you come to me and you're a completely new investor, I would advise you to start slow with SPY. That's why I used it in my example. But that's not enough, because again, it's just stocks. You need to diversify in more assets. I did not just say that you need to put your money into just stocks. Diversify into more assets, get into bonds, get into somehow real estate. A lot of people say buying your own home is an investment. Now that we have bought our own home, I don't believe it. It's not an investment. It's a very long kharcha. So maybe get a rental unit, maybe invest. There are so many groups which have this like pooled investments where you can invest in rental units. So have a diversification basis. Definitely start with SPY. I also posted, I think 2-3 days back, about 2 more stocks, which is VTI. I think it's total market index, not just 500. Then there is Fidelity 500, which is a little different from SPY. There are many other stocks like this which can provide you more exposure. So if you're buying SPY, might as well buy VTI as well. It will give you 4,000 companies exposure. So you can expose yourself largely in the stock market when you're young, but you need to invest in other sources of investment as well. Any other question? Okay, I think if anybody has a question, I'm here. You can come to me and we can talk about it. Thank you so much. You were a very good audience.
Thank you guys, great audience, great speaker, thank you so much.
We have a surprise.
We do have a surprise. So Shermeen was in the back listening in and kind of seeing who's participating the most, and she's going to give out a few books.
This is the book which I started reading couple of months back. I'm not saying this is one of my favorite books, but this book definitely gave me a lot of inspiration to stand here today, to start something of my own, and to take charge of my own career. And I thought that I'll give this book to the person who participated the most. And I think, Mr. Econ, you get it. I hope that you get a lot of inspiration from this book and enjoy reading it. I'll get you your candy.
Right, yeah, thank you once again. So this is the end of the presentation part. We do have food outside, so feel free to start making your way out there. Grab food, and then now it'll just be open networking, so talk to each other or come up and ask more questions if you have them. Thank you.
Thank you for the wonderful presentation. Thank you.
Very knowledgeable.